Good to see you, Scott.
All right, we're putting a good first half in the books. Does it carry over to the second half? What do you think?
Wow. I mean, my forecast at the beginning of the year was 15%, and we just kind of today just crossed over that for the whole year. And really, the economic data, the economic activity, real growth has certainly exceeded the Fed's expectations, everyone's expectations. And I think what's going on with tech investors, it's a win-win for them. They say, listen, it's a long asset. If we have a recession, tech is mostly immune. And if we have a recession, the Fed will stop raising interest rates, maybe lower interest rates. That's really good for our long-lived assets that we have. So everyone piling into tech because they say that it's a win-win no matter what happens to the economy. Of course, what's happening is the non-tech are selling at 14 and 15 times earnings, and tech is selling at 25, 30, 35 times earnings. So that gap has certainly grown a lot recently and takes into account that scenario. But hey, the beat goes on, and I think the whole market is saying, who's afraid of the big bad Fed?
Yeah. Hey, is the beat going to go on for the second half? I mean, how long can this continue?
Well, it can continue a lot longer. Now, that gets a problem for long-term investors because it's so hard to tell the turn. But really, the momentum is still there. I think if you're a short-term trader, I think it's going to take a real weak economic report or some earnings that really, it's the opposite of what we saw with NVIDIA, really a disappointment to shake it. And by the way, usually it's not one thing. It shakes and then comes back, and then it's usually a second one that says, ooh, the tide is turning. And at this particular point, we don't have number one or number two. So one of the oldest sayings in Wall Street, Scott, make the trend your friend.
Yeah.
And
it's a new trend. I mean, the trend has changed, right? As you know, the trend has been up. Do you foresee a catch-up trade? You said tech has been the winner, and you pointed to some of these other areas of the market which you think are much cheaper from a valuation standpoint. Is there going to be a catch-up trade where some of these laggards, the financials, the energy stocks, and things like that are going to have a catch-up?
Well, I think there are. I think what's going to happen. If the Fed over-tightens, and I've been warning about the Fed over-tightening. Scott, what really confuses me is since the meeting 2.5 weeks ago, every single inflation indicator, including wages, has come in at or below expectations. And yet the rhetoric of the Fed has gotten even more aggressive. It's like a war on growth. Oh, we can't have this much growth. I think that's a very dangerous way to look at the economy. We want growth in the economy. We want non-inflationary growth. I am still saying in the second half, there are more risks on the downside than on the upside. But then again, that whole saying about trends can continue a lot longer for I don't see the short run trend breaking at any point soon.